President Mwai Kibaki, as we heard in the news headlines, confirming the appointment of Robinson Gitai as the finance minister. Any market reaction to the kind of political developments we're seeing on that end by the markets? Because along with that appointment, we've seen several changes to cabinet itself.
I think nothing significant with regards to the finance ministry in particular. I think already the market had adjusted to that situation. I think there were quite a number of other changes which were also quite significant. The changes in the justice ministry were of particular interest. But overall, I think the market might be maybe a bit concerned with the way the changes were made, and maybe what signal it may send over the coming months in terms of governance. But overall, I guess we'll just wait to see how the performance for the ministers is going to happen. Maybe we might see some good surprises.
I ask because we've got increased rhetoric coming through ahead of that election that must be held by March next year. So in terms of politics and the markets, how are you seeing this entire year period moving forward, progressing? And the kind of impact that political scenario is going to have on investor sentiment as a whole?
I don't see that much of a problem. I mean, if you look at, we either have two options for the December elections or March, as was suggested by the courts. So at the moment, the worst case scenario is that we're going to have elections in March. So I think already the market is factoring in that, and there isn't any significant jitteriness on that part. I think there's quite a bit of uncertainty with regards to who's going to take over, because essentially we haven't seen, in terms of the coalitions being set up and the front runners actually coming through. So I think until we get that clarity, we'll have a bit of uncertainty. Not really a concern, but uncertainty.
So no jitters just yet, but what is keeping the markets active is the kind of excitement that's filtered through on the back of news that Kenya has made its first oil discovery in the northern part of the country. And this, where of course we were talking about earlier, traders saying we could see something like the shilling, for example, a benefit in the medium term from increased FDI into the oil sector. We had the energy minister over in Kenya speaking specifically about this find. Let's hear what he had to say.
Has confirmed the presence of light waxy crude oil. This discovery is a promising first step for Kenya. It is the start of a Mutual exploratory drilling campaign which will be undertaken over the next 3 years. The well has been drilled to an initial depth of 1,041 meters, and it will continue to a total depth of about 2,700 meters to explore for deeper potential of these prospects.
Eric, of course, this find has been significant, and while it's too early to determine the size and its likely, commercial impact on the economy as a whole, what do you make of the kind of discovery that's been made and the potential impact we're looking forward to?
I think in the interim, we are probably still going to see a lot of activity around the sector. We were already looking at, transport logistics companies, construction companies. Those are all likely to benefit. And if you think about the Lamu Port project, which essentially was creating a transport corridor to southern Sudan and Ethiopia, there is now an additional impetus to that, because essentially the location is right, along that corridor. So essentially, we think it's going to be very good for the country. If commercial viability is determined, Kenya already imports about 40% of its imports constitute of oil and chemicals. So if the find is sizable enough and covers that, I think from a macro perspective, that's going to be very positive. And we've seen in other countries, if you look at Angola, Uganda, Ghana, when you discover oil, in the year when you start production, the first few years when you're actually stepping up production, we see 30–40% increase in GDP. So we think it's positive.
Of course, those would be some of the direct benefactors. If you're looking at the less obvious benefactors of a find like this, or mentions being made of the likes of an East African Breweries, for example, where this would see growth in household consumption, where household consumption expenditure makes up already 75% of Kenya's GDP. Just how much of a focus do you put on a counter like East African Breweries amidst it all?
I think in essence, if you're looking at East African Breweries, it's a consumer, and if the consumer generally has higher income, we think that's a company that is likely to benefit. I mean, we've been concerned with regards to potential competitive pressure in the sector, with Sub Miller coming in, Heineken as well looking to set up in Kenya, in terms of stepping up the number of brands and so forth. So I think with the increased consumption, it will be a market sizable enough to accommodate quite a number of players.
Well, what it certainly does is it reduces Kenya's reliance on the agricultural sector for its revenue growth. And within that agricultural space, we saw Limuru Tea yesterday posting a 42.6% drop in 2011 pre-tax profit. Market reaction to those numbers, Eric?
We haven't seen a reaction as of yet, but we think it's probably going to be negative. The earnings were quite disappointing, coming from a year when the rest of the sector has been posting a good performance. But just to mention with regards to the agricultural sector, I mean, the Kenyan economy is probably one of the most diversified in the continent. And even though the agricultural sector has been highlighted significantly, already the service sector is quite important to the overall economy.